Hi guys, and welcome back to my channel. If you guys are new here, my name is Mel and welcome back to another episode of the New Money Stock series. So if you're not familiar with the New Money series, it's basically a series where I keep you, the everyday worker, in the loop of how the markets are moving, why they're moving the way they're moving, any macroeconomic news, any Fed decisions, pretty much anything that could sway the markets. I kind of keep you in the loop because I know that when you're working, it's hard to watch TV, it's hard to check your phone all the time to understand why it's moving the way it's moving. So with all that being said, I got you. Before we go any further though, go ahead and like, subscribe, please share my channel, help me grow my channel, and then let's get into the video. All right, so the war in Iran has played a huge part on why the markets are pulling back. If you've been watching your phones, if you've been watching the news, I know you've seen it. I know you've noticed it. I know you felt it even if you are a trader. It's been kind of difficult here lately. But, you know, there's always opportunity when the market pulls back. Okay, so if you're wondering, well, why is the war in Iran causing the markets to pull back? So I'm going to try to simplify it for you as best as I can. So when the US struck Iran basically said, you know, that little passageway that we control where oil ships, well, guess what? We're going to cut it off. You're not going to be able to get through. And this created a whole supply and demand issue. So that's why you've gone to the pumps and you've noticed that gas prices are higher now because the price of a barrel costs around $100 now. So for context, for every $10 increase in a barrel of oil, it's going to be about a 25-cent increase at the pump. So I don't know about you, but I know a week and a half prior to all of this conflict taking place, down the street from my house, gas was like $2.39. I wish I would have gassed up. I wish I would have filled up. I am a pay $10 here, drive, pay $10 there person, and I need to stop. But yeah, I know you felt it. I know you've seen it. Depending on where you are in the world, gas is anywhere from about $3.50 to $5. Prior to the war, gas, a barrel of oil was around about $65 to $70 a barrel, whereas now we're looking at about $100 a barrel, which is kind of crazy. And you probably wondering, well, now how does oil affect my stocks and just the economy in general? So if the price of oil is higher, then that means your disposable income goes down, right? Because when you're having to pay more at the pump, you have less in your pockets to do just things that you would do with, like I said, with your disposable income. So things like, you know, going out to eat, going to the movies, going shopping. So yeah, I mean, you can kind of see now how oil being hit could directly affect your pockets, and it can affect your stocks. And not even just oil or gas at the pump. You think about jet fuel. So of course, the same thing. Airline stocks have been hit because jet fuel costs more money now. I was looking at Delta Airlines, and they're down around like 15% since this whole conflict even started. Delta even closed below its 200-day moving average. And if you're a trader, if you are into technical analysis, you know that nothing good usually happens below the 200-day, right? And if you are new here, I do trade stocks. I invest in stocks as well, but I do trade stocks. I do have a beginner's guide to day trading. If you are interested, I will link it in the description box. But yeah, so Delta had pulled back below its 200-day moving average, but I do want to pull up the chart because I want to show you something. There may be some opportunity in Delta. So I pulled up the chart and I changed it to a weekly chart. Once I pulled up the weekly, I noticed that there's a beautiful support level or buyer's level that Delta could possibly bounce off of. So if you're watching this, I'm recording this on a Saturday. I plan on posting this on Sunday, so you should be watching this on a Sunday. If it bounces on Monday, I told you guys so, okay? So yeah, that's just what the chart is telling me, especially if some news comes out, if there's some type of resolution between the US and Iran, you may see a bounce in Delta. So be looking out for that. Economists are even saying that the conflict could affect the prices of food in the grocery stores if this continues longer than expected. And this is because the transport of food, which is usually by diesel trucks, could go up because it's going to cost them more to transport the food to the grocery stores. And of course, everything always gets passed down to the consumer. Just like when inflation happened and tariffs happen, it passes down to us. So just be on the lookout for food prices going up. Right now, they're okay still. They're still stable. They haven't been affected yet, but it's a possibility if this war continues for longer, right? So if people aren't spending as much due to inflation, sectors like the consumer discretionary sector can be hit. So this is another way, this is another reason I should say your stocks can be hit. So consumer discretionary is your non-essential goods and services. So think cars, apparel, retail and restaurants. So the XLY, which is the ETF that tracks the consumer discretionary stocks, Friday before the start of all of this conflict, which was like January, I'm sorry, not January. It was February 28th, I believe it was. The stock was trading at $116.86 and is now down to $110. So roughly about 5.5% drawdown we've seen in the ETF that tracks the consumer discretionary stocks. And that's why, because like all of that I just explained to you, they're going to be hit because you don't have as much disposable income. And then on the flip side of that, you've probably noticed that energy stocks have been skyrocketing. Chevron was up this week 4%, Exxon was up 4%. The energy ETF, the XLE that tracks those plus more were even up. So yeah. So where do I think it goes from here? So my take is that I think that energy has ran too far, too fast. I will say I do think there's more room to run on it, but I personally, I'm not jumping in, right? Anything could come out, any news can come out, and I definitely wouldn't want to be into this on a day like the weekend where news could come out tomorrow and it could severely sway how the markets move. So yeah, I wouldn't jump in. I will say that experts are saying that a barrel, if it continues, could go as high as $150, which means that, you know, all of those stocks that I just mentioned, Chevron, Exxon, it could continue to go up. But, you know, what goes up has to come down eventually. So I'm not touching it. And then there is opportunity in a lot of the other sectors that have been hit the hardest, right? So I'm a Mag 7 girl. I trade mega cap tech, if you don't know. And one of my stocks right now that I am loading up on is Meta, right? So year to date, pretty much all the Mag 7 stocks are negative. They are all negative. The SPY is even negative. And you may be wondering, well, why Meta? Well, Meta honestly has always been the underdog in the Mag 7 stocks. They like to be beat up on. They like to be pounced on. You think back in 2022, if you were into the stock market then, you remember when Meta pulled back to $88, what I would do today for an $88 Meta stock. But yeah, so Meta pulled back to $88 back then. They ran like 500, 600% since. Yeah, but not even just that. That's not the reason why. It's not because, oh, well, they got beat down then, they must rebound now. That's not why. If you look at the numbers, Meta is the cheapest Mag 7 stock. Is trading at a forward PE of around about 20. Which relative to the other Mag 7 stocks and Meta's average forward PE is pretty cheap. So I'm looking at Meta. Meta as of Friday closed around about $615. I'm looking at Meta. I actually added more when it pulled back. So I got in around like 613, 614. I got my stop at about 596. So we'll see, but I'm loving Meta. And be on the lookout. I'll be posting a deep dive on Meta stocks so you can kind of understand a little bit better why I like Meta the way I like Meta. So this upcoming week, there's a lot on deck for the markets. The Fed decision looms. So the FOMC Fed interest rate decision is coming up on Wednesday. So the Fed long-term goal is 2%. So the 2% inflation target is what they're striving for. And this is measured through the PCE index, really the core PCE. And the reason why it's the core PCE is because it gets rid of the food and energy, because they're pretty volatile, as you can see. So they strip out food and energy and just hit what's the core part of inflation. So it remains high. When the numbers came out, the core PCE for January was at 3.1%, which their goal is 2%. And then on top of that, the GDP was revised down to 0.7. So we got higher inflation still. We have slowing growth. Stagflation. Stagflation has been the key term here lately. So what stagflation is basically where you have inflation where it's still high, unemployment is creeping up, but growth is slowing. And this is kind of a sticky situation because it puts the Fed in a weird position, because they're trying to decide, should we pause? Should we cut? Should we even hike now? So it's kind of a sticky situation. So who knows what happens. So Wednesday is when the FOMC Fed interest rate decision is going to be made. And then as well as Wednesday, we're also going to have PPI, core PPI. And then on Thursday, we have initial jobless claims. So if you are a trader, just be mindful that the Fed will be making an interest rate decision on Wednesday. So there may be a lot of volatility in the markets, like there isn't already, just maybe more volatility in the markets on Wednesday. But I will say, I do think overall that we may see a bottom here soon, because even before all of this conflict started, we were already starting to pull back. There was a lot of rotation out of some of the mega cap tech. You probably saw energy already creeping up. You saw things like Walmart being invested more heavily in, some of your safe haven stocks. It was more of a risk off appetite going on. So I think that risk on is fixing to start here soon. So we'll see where the market goes. But yeah, that's my take on that. All right, guys. So thank you for tuning in to another episode of the New Money Stock series. I tried to bring it down as far as time. The previous ones were pretty long, so I'm trying to condense it down some so you don't have to. I know we already don't have a lot of time to learn what we need to learn and know what we need to know. So I try to bring it down, condense it down for you guys. So thank you guys for watching. Go ahead and like and subscribe. Please share my content. Help me grow my channel. And thank you guys for watching.